Welcome to Different Makes a Difference, where we discuss investment matters that matter to everyday investors. Join Odlum Brown's equity analysts as we examine pertinent topics in today's markets and look at things a little differently. Odlum Brown is an independent Canadian investment firm. We provide integrated wealth management solutions to help clients achieve their financial goals, and we've been doing so for over 100 years. Join us for some lessons we've learned along the way that can make a difference for the future.
Hello and welcome to Different Makes a Difference. I'm Stephen Boland. Accidents do happen. I had one a few months ago. I was driving and had a little bump with another car. It was very minor. No one was hurt. Damage was minimal, but it meant I had to spend some time on the phone talking to my insurance company. Now, our guest today spends a lot of time talking and thinking about insurance, and that's because he covers insurance stocks for Odlum Brown. With me today is Trevor Chang. Welcome, Trevor.
Thanks for having me here again, Stephen.
So, Trevor, you've been with Odlum Brown for nearly a decade. You've covered companies in real estate, aerospace, retail. Last summer, you took on coverage of the financial industry as well. And as your first new stock pick in financials, you recommended an insurance company called Progressive. Can you start by telling us a little bit more about Progressive?
Yeah, so Progressive is a U.S. property and casualty insurer. They're the second largest in the U.S. in auto insurance. Property and casualty insurance is a whole host of different types of insurance, like homeowners insurance, renters insurance, and autos, as we talked about. Why autos is so important for Progressive is because 85% of their insurance book is in auto insurance. This is a firm that's been around for a long time. They were founded in 1937, and most people today probably know the company from their ads. Insurance companies are big advertisers. For Progressive, their ads feature a character called Flo.
I have seen Flo on television many times. I know exactly who you're talking about there. They're number 2 with a 17% market share. What that tells me is there's a bunch of other U.S. auto insurance companies out there as well. Why is Progressive your favorite?
Yeah, so what makes Progressive special is that they consistently generate an underwriting profit. Underwriting is the process where insurance companies evaluate risk and assign it a price. The reason why Progressive has this specialty in making a profit is because they invested a lot in the technology that goes behind evaluating these risks. They were early in telematics. Telematics is when customer voluntarily installs usually a tracking device on their vehicle, and they submit more information to the auto insurer in hopes of getting a lower insurance price. And again, Progressive was early in doing this. Most companies now have their own telematics offering, but certainly I think a lot of the other technology offerings that Progressive has done in the back end hasn't been replicated yet.
Okay, so the technology advantage. You've told me before that they have an admirable culture as well. And we do talk a lot on this podcast about the importance of corporate culture. Tell us a bit more about that at Progressive.
Yeah, so it seems like people really enjoy working at Progressive. A third of their employee base has been there for about a decade or more. And they really have this unique incentive program called Gain Share, in which they incentivize employees to grow the firm as fast as possible while still generating an underwriting profit. I think Gain Share is part of the reason why the company has consistently invested in technology to maintain their underwriting advantage. So yeah, it's been a big help to the business for sure.
Okay, that's great to hear. We've talked before on this podcast about the concept of float in insurance. Can you remind us again, what is float and how does Progressive invest its float?
Yeah, so float is the money an insurance company holds between the time they collect the premiums from their customers and when they pay it out to policyholders. Now, Progressive realized pretty early on that investing is not their forte. That's not where they have the advantage. Their advantage is in the underwriting. So their investment portfolio, where they invest in with the float, is pretty conservative. It's 95% fixed income with a double A minus credit rating. So very high quality securities.
Staying safe on investments so that they can continue to make money on the underwriting where they have those advantages around technology and the culture. That's interesting. And that's helped drive a lot of growth for this company over time. It's been a big market share gainer. And it makes me wonder, they're already number two. They have a big market share. How much more opportunity is there for Progressive to grow?
So at a 70% market share today, I think there's still a lot of opportunity. Certainly, when I look out to the competitive environment and I stack up their competition, I think Geico is their most formidable competitor. Geico is owned by Berkshire Hathaway and Warren Buffett now, I think is the chairman, right?
Is he chairman or Todd Combs? I don't know. He's chairman of Berkshire. There we go. Yes.
And so I think Geico has lost a step over the past couple of years, which means the opportunity for Progressive is probably even better today. It's interesting. If you look at the past, maybe 15 years now, so in 2010, the top three auto insurers had 37% cumulative market share. Today, that number has risen to 47%. So the bigger certainly have gotten better. And what explains this trend? Well, companies like Progressive certainly have the technological advantage, but also many of these large insurers have a distribution advantage too. A lot of them now sell directly to the customer. They don't use independent agents. Independent agents are typically a more expensive way to sell insurance. And as a result, these larger insurers, like a Progressive, like some of these Progressive's larger peers, they're able to undercut the smaller competitors on price, offering cheaper insurance to customers while still generating an underwriting profit and gain market share. So that is really been what's going on over the past 15 years in this industry.
It certainly paid off for shareholders. It's been an excellent stock to own for a long time. The last year, not quite so much. The stock is down from its prior highs. Why is now a good time to buy?
Yeah, so certainly, this is a competitive and a cyclical industry. Auto insurance prices have been decelerating. At the same time, a lot of their competitors have gone more aggressive on the advertising front in order to protect their market share. So margins are coming down. Analysts are not really forecasting for much growth, if any. But when we take a step back and we look at what you're getting, you're buying a best-in-class insurer at a valuation multiple that's at the low end of its historical 10-year range. And we just think that's a pretty compelling value proposition. When pricing in this industry inevitably inflects in the future, we think Progressive could be worth much more.
So some short-term pressures, maybe growth slows a little now, but the long-term picture is still quite positive and they can get back to growth over time. I want to change gears just a little bit since we're here in Canada, British Columbia. We have a Crown Corporation that provides auto insurance for most. The same is the case in Manitoba and Saskatchewan. A lot of the other provinces have private systems. One of the big insurance providers in Canada is Intact Financial, and that's a stock we've been recommending for well over a decade. You cover Intact now. Share with us your current thinking on Intact Financial.
Well, before I get there, let's remind everyone what Intact does. Intact is a Canadian property and casualty insurer. They do auto insurance in Canada. They do property insurance in Canada. In the US, they focus on some specialty lines. Like a Progressive, their end markets are also decelerating. So the stock has pulled back somewhat. Intact is a firm that's run by actuaries. They focus on generating a return on equity that's 5% better than the industry, and they've accomplished that. But certainly when we stack up Intact versus a Progressive, even despite the recent pullback, Intact's valuation still trades at a premium, and therefore at the margin, we think Progressive is a more compelling investment opportunity.
When you say Intact is run by actuaries, why is that important? What does that mean?
Well, that just means that they're really good at pricing risk. And, we certainly talked about that earlier with Progressive. If you can do better at evaluating risk and pricing risk, then certainly you can pass on some of these savings to customers. and while still generating a profit and gaining market share. And these are all high quality attributes of good insurance companies.
That's excellent. Thanks, Trevor, for sharing that today and telling us about your new idea, progressive insurance. Most of us don't want to deal with insurance. It generally means something has gone wrong. But when something does go wrong, we're usually happy to be insured. Insurance is a valuable service, and companies like Progressive and Intact have been very valuable to shareholders as well. Progressive is an advantaged company, but the stock is now down because investors are worried about a softer pricing environment. Trevor sees that as a buying opportunity. At some point, the cycle will improve, and Progressive can continue to grow and build on its long history of success. Thank you, everyone, for listening. We hope you enjoyed this podcast, and we look forward to talking again soon.
Thank you for listening to another episode of Different Makes a Difference. Just as every individual is unique, so are your financial circumstances. Be sure to talk to your professional advisors for advice related specifically to you. Our podcast is for general information purposes for Canadians only. The views expressed are those of the presenters and may not reflect the opinions of Odlum Brown. Be sure to check out our full disclaimer and subscribe to the podcast at odlumbrown.com/differentmakesadifference. Odlum Brown is a member of the Canadian Investor Protection Fund.